Hi, my name is Ola Oyetayo, co-founder and CEO of Verto. Verto is a cross-border payments platform for businesses, and our mission is to simplify business cross-border payments in emerging markets.
Welcome to the African Tech Roundup, Ola.
Thank you.
Set the scene for our listeners. Payments is a very big space. And imagine a canvas before you, some paint and some brushes I hand you, and your job is to flesh out for our audience, our listening audience, in words that is, what the space looks like and where Verto fits in that landscape.
If you think about the world of payments as being a space essentially where companies are designed to help you move your money, that's essentially kind of what payments is. And within that world, there's a subset of companies that are designed to help you move your money locally. So that might be if you're making a payment to someone that is like a business or a friend or family, you actually need to make a transfer to that person or that business. There's also a subset of companies that actually help you receive money. For example, if you're a business, so that could be receiving money online. That's sort of like payment gateways and acquiring companies as well. And then there is a subset of companies that actually help you do international payments, which is cross-border payments. So essentially, cross-border payments is the art of helping individuals or businesses move money from a local place to somewhere outside of that place. And most often than not, it is international, so it's across borders. Where Verto sits is in that space where it's cross-border. We're effectively helping a local business, in our case, do an international payment. And there's two legs to that. So first is you're probably converting a local currency to a foreign one, because most often than not, you need to make a payment in a different currency. You're doing that first leg of foreign currency conversion, and then you're doing the payment leg, which is you're getting the money sent out across borders to a beneficiary. And that's essentially kind of where we sit in the payment world map.
Reflecting on your professional history, which of your past roles would you say prepared you the best for the work you now do at Verto? So we have things like being a management trainee at Carphone Warehouse. We have being a financial analyst at American Express, an assistant vice president of debt products finance at Barclays, corporate treasury at group level at Lloyds Banking Group, group treasury again at ICBC Standard Bank, and then a portfolio manager at Arbitrage Capital Limited before you co-founded Verto. What would you point to in some of those experiences, professional experiences, as the most leverageable experience to do what you just described Verto does now?
The honest answer is none of those. In terms of the actual day-to-day versus kind of what I do now at Verto, none of my kind of professional experience prior to founding a business actually related to doing a fintech that does cross-border payments. To a certain extent, there is certain sort of adjacencies when I did sort of treasury work at large banks such as Lloyds and ICBC Standard Bank, because that had to do with, foreign currencies as part of the mix of stuff that we did there. But outside of that, none of the other stuff that I did was directly correlated to the work that I'm doing now at Verto.
So then which begs the question, why would you do this?
No, very, very good question. So I think ignorance is bliss. Honestly, sometimes the people that end up kind of solving some of the, bigger problems that we have that are left to be solved are folks that literally fall into it very naively. So I'd say the reason I'm doing this is I naively thought that it would be easy to help businesses in what people call higher risk regions, such as Africa, move money internationally. And I just fell into it and said, hey, why don't I go figure it out with my co-founder, Anthony? And that's why I'm doing it. But if I had like all the knowledge and it was a space that I was super familiar with, all the risk factors would have been flashing red at me and I wouldn't have taken the plunge. So I think in this case, it's like pure ignorance has really served us well to this stage.
Some people call fintech quite provocatively the only truly VC backable tech vertical in Africa by classical VC definitions. How much of that statement do you vibe with, given the experience you've had? And to what degree, perhaps, would you disagree with it in light of the opportunity and how big it is, perhaps, and how you perceive it?
I think that's not an entirely wrong characterization. If you think about the way true venture capital works, the whole idea is to kind of look for extremely large outcomes. So you're looking for $1 billion type businesses. To get to $1 billion, you probably need to be doing north of $100 million in revenue. And if you think about Africa as a continent, there's only a few industries where you can actually have that sort of large outcome with respect to annual revenue for each company. There's the extractive industry, so mining, oil and gas. There's financial services, so banking, insurance. And quite frankly, I can't even think of any other industry. So obviously, there's not much technology that you can apply to, in my view, the extractive industries. So there's only so much you can do there if you're a venture capitalist. But when it comes to financial services, especially given the fact that Africa as a continent is still severely underserved with respect to financial services, and it's easy to use tech as a lever, I think it just correlates to the fact that it definitely is one of the few industries that you can actually deploy venture capital, put $5-10 million to play in a business and help that business get to north of $100 million in revenue. So I don't disagree with that. I think it's actually a very fair characterization.
So thinking back to the VC backable case you made to a room full of some of Silicon Valley's most prolific investors as you graduated out of the Y Combinator program some years ago. What year was that?
2019.
So think back to 2019, we're heading into COVID. Okay, so think about that case for Bacchus, ladies and gentlemen, and the experience you've so far walked out and the traction you're posting currently. Give us some of the highlights and maybe the points of tension between that case you made and what's being proved out.
So we did Y Combinator in winter of 2019. So that's essentially 6 years ago now. And I don't think I've told this story before. So when we did YC, you do something called Demo Day, which is YC preps you for this day where you pitch in a 3-minute sort of spiel to investors. And on our Demo Day, I don't think I had presented yet, but I was going to present after lunch. And then during lunch, it was kind of like, people kind of went out of the venue and everyone just was outside. And I ran into Vinod Khosla, I think arguably probably top 3 all-time venture capitalists in terms of kind of like the outcomes that he's made for himself and his funds.
He's got guru vibes when you listen to him speak.
He's got guru vibes. And it was so weird. So I literally ran into Vinod and he just said, what are you building? And I started telling him about, I have this startup that is doing kind of cross-border payments in Africa. And he asked some very, very strong, intelligent questions. And then said, I'll look forward to your pitch. And then I did a pitch. And then I got an email from him maybe the day or 2 days after Demo Day asking to meet up. And then we went to his office on Sand Hill Road, the whole works. And it was very interesting. And I still remember this to today. He basically was asking about the business. He was also asking about the problem that we're solving for. Obviously, we're trying to do cross-border payments in emerging markets, Africa. This is the reason why it's a big problem. And then he asked me a question way back then about kind of stablecoins. And this was like 2019. And I didn't have an answer to that. So he basically goes, why is this thing so hard? Or why haven't people kind of started using stablecoins to solve for this? And I think IBM had it was called WeWire or something. IBM had something then in this space. And I just thought, wow, this is so profound in terms of kind of the way he was thinking at the time. And obviously now, stablecoins are the rage for kind of what we're building or what we're solving for. So if I think about that in terms of where venture sits in terms of innovation and how to solve for sort of critical problems such as what we're facing in markets such as Africa with cross-border, for me, it's kind of like where we should be thinking in terms of innovation. The problem that exists with moving money in markets such as Africa or the Middle East or, parts of Latin America and Asia is just fundamental to something that calls for innovation to solve for it. And it's amazing that it's taken us this long to get to a place where we feel that there might be a solution in place and it's outside of the traditional mainstream correspondent banking or fiat world. And that for me speaks to the power of technology and innovation in solving real world problems. And I think it behoves, everyone in this space or doing fintech to really think long and hard about how you can apply technology to solving things that are sort of real world problems. And that's kind of the reason why we, for example, at Verto exist. We just want to basically apply technology to something that is fundamentally a hard problem to solve and do it in an innovative way and hopefully also a very scalable way as well.
I have a contrarian view to your surprise that, we haven't figured this out. I, on the other hand, sense that it's any wonder anything good ever happens in the world because of just how bent to dysfunction humanity seems to be. But also, I think fundamentally when I look at financial institutions and global economics, I think at the heart of that is the question of trust and how it's brokered, maybe trust and access. People jump to inclusion. I really think it's an access question. But I would have thought that maybe these are some of the things you would have got from your time in institutional finance. This understanding that there are rooms of people who are building networks of trust and access that are proprietary and privileged. And I might have my feelings about whether that's good or not, but effectively that's how it is. And part of what you are doing, I imagine, when you are innovating in that space is undermining to a negative degree if you're those people and they're trying to protect themselves, or you are looking to, at best, disrupt what seems to be working just fine for them. So I wonder to what degree even the fact that we're having this conversation here in London speaks to that, if at all.
You're very right in the sense that fundamentally there is, a common currency, which is trust in solving for some of these problems, especially with anything that has to do with financial services. I also think you're right to say that sometimes it's an access issue or question versus an inclusion issue or question as well. I would say that my time kind of being institutions did sort of speak to what you've just said, where, essentially a close group of people act in a certain way consistently over time have built a network of trust and brand and credibility. So I worked in the city of London, and it's when you come outside of that bubble that you realize how actually small it is. And, now that I'm kind of in the startup world, some of the things that you kind of take for granted there, which is like everyone just being kind of switched on, time management, being able to prioritize things, integrity, just being fast paced and getting stuff done. Sometimes you take, you take those things for granted when you come out of that world. But the reality is that it doesn't mean that you can't still, apply some of those lessons and innovate or take some of that into kind of a more disruptive world. And you have those key tenets. You've also seen quite a lot of fintech, let's call them upstarts, build a lot of brand loyalty and trust as well in such a very short period of time. And I genuinely think that's the transformative power of technology, because you don't need to be in a room, have gone to some schools, wear some kind of ring on your finger, whatever, to belong, right?
Although it probably doesn't hurt to have studied at King's College, right?
It doesn't hurt. It doesn't hurt. But then ultimately, the true power of technology just means that everyone has that access that you spoke about, right? Like that's why there's such a big content industry now, right? Where you've these intermediated traditional media institutions and folks that basically just, like what you're doing with your podcast. And I know it's, reasonably kind of selective as well, but you can directly speak to people that are interested in your content, and there doesn't have to be any gatekeeper. And I think that's the same thing in financial services with what folks are trying to do, which is build a product, build it very well, and you can basically embed the trust in that product from customers using it and deploy that at scale. And you genuinely don't need, this whole institutional backing and all the boys network or whatever it is to make that work. And for the true kind of builders and creators out there, that's the task that you have at hand. You really need to build something that is strong and viral. And you can definitely disintermediate kind of traditional institutions. And that's kind of what I think as well. So that's why I don't think anyone has a monopoly of kind of access or, having some pedigree means that you would. It just means that if you're building fast and building well, you can definitely build that trust with your customers and also build something in a very short span of time that would last.
To be clear, I think there are lots of things that are true at the same time. I mean, it's King's College for you. But by the way, what did you study at King's College?
King's College was my secondary school in Nigeria.
Oh, so it's not King's College London?
No, not King's College London, no.
I'm so glad we cleared that up.
Yeah, sure.
I'm pretty sure that's vibe still in terms of just a good place to pick up some education. Well, it might be education anywhere posh for anyone listening right now. It was Montessori preschool for me, right? Because I have no posh credentials beyond getting a Montessori education like very few young Black boys in Zimbabwe might have. But I think there's something to be said for the leveraging of those privileged networks in ways that's unique and hopefully additive and responsible as far as stewardship is concerned, alongside the fact that you don't necessarily need to have those networks in order to succeed. Although I would caution anyone in listening to this podcast undermining the value of those networks or cultivating them or solving for those gaps in your network or connectivity profile if it exists, if they're going to try and do anything like what you're achieving with your team at Verto. Is that fair to say?
That's very fair to say. And I think the big caveat is at any point in time, you would always have to form networks, right? So there is a tech network, for example, there's a fintech network, there's tons of networks everywhere. And by its very design, most networks operate on trust, right? So fundamentally, as human beings, people want to belong to something. You want to build a community. You want to be part of a tribe, right? Now, the values that underpin that tribe, determines, how successful that tribe or network would be. So I think fundamentally everyone has 3 or 4 tribes that they would have to belong to, in life, regardless. What we're saying here is that we shouldn't ascribe access and privilege to certain tribes. And then that's kind of like means that everyone else is gated and can't have that same sort of outcome when it comes to, reasonable success. So I think that's the point that we're making here. And technology actually, I think fundamentally becomes a level playing field to a certain extent. Not everyone is going to be able to code or learn how to kind of deploy technology, but it is a reasonable level playing field, which if you put your mind to it and you're kind of like attuned to it, naturally inclined in that space, you can essentially kind of be able to participate in whatever you want to do in the world. And that's what I'm saying. That's the benefit of tech and innovation versus kind of relying on sort of some old world network as well.
Institutional privileges.
Absolutely.
So something you said just triggered a thought. As far as producing audio content goes, even as popular as podcasting has become in the world today, particularly if you think about it as a fast-growing medium on the continent, I couldn't have picked a perhaps more exclusive proposition by being a podcaster versus being, say, on radio. And so the most democratized thing I've ever done in media, and perhaps the most impactful by audience size, was my time spent at the BBC, for example, being heard by a weekly audience of 43 million. And so it occurs to me that there might be a parallel to your being in an industry that is obviously democratizing access and driving what some might frame as inclusion, financial inclusion, but you've chosen to go B2B. I think there's 2 questions I have. One, to what degree is that a pragmatic business decision that is linked to that picture you painted at the beginning? So the gaps and the opportunities you were obviously looking to solve for. And to what extent does it lean into some of what we were talking about? Just going, hey, maybe you need to start with where the deals are made and how things trickle down into society economically.
I would say the honest answer is it's mostly a pragmatic business decision, because when we thought about kind of the space and, how to build into it, what we realized is that the biggest trend we could actually try to leverage on was the increase in trade between, say, Africa and the rest of the world, and also between sort of countries within Africa as a continent. And when we looked at it, there was really no one solving, for that opportunity. There was maybe 1 or 2 names. So from a very kind of strategic perspective, it just made sense to tap into B2B, kind of leveraging on the growth in trade between the continent and the rest of the world and within the continent as well.
Before you carry on, please just flesh that out for us, because I can think of some very big names like, MoneyGrams and things like that. Are you talking names at the B2B level? Say I'm a business person trying to make a payment for a consignment of stuff I've ordered from Turkey or China, and I don't have a solution for me? Or are you talking about just generally above a certain dollar point, there literally was nothing out there for someone trying to transact cross-border?
Yeah. So if you're a business looking to transact cross-border and you're domiciled in Africa as a continent, outside of kind of traditional banks, there's literally nothing else. However, consumer remittance, I think, has been relatively solved for, right? There's been a wave maybe about 15 odd years ago of the likes of World Remit and Remitly becoming the tech equivalent of Western Union and MoneyGrams. And then also the flow of funds with traditional remittance has always been Africans in the diaspora sending money back home. You rarely have it the other way around, which is someone in Lagos. There's, maybe a few people in Africa sending money out as individuals. Maybe.
Shout out to you, HNIW. What is it?
HNIs on the continent paying school fees and medical and all of that stuff.
We see you.
Yeah, but that's a very small, segment, right? So you can't really build into that space. So the pragmatic business decision was, how do you write? There's like $286 billion worth of trade between Africa and China in 2023. And this is non-extractive industry type trade, non-infrastructure flows, pure goods and services, right? So, and that's grown over a decade. That grew about like 8 times. So how do you really tap into that? So if I'm an African consumer and I see this nice fancy good from China and I would like to buy it, which most of us in Africa do, unfortunately, because we don't really produce much stuff, who's servicing that flow, right? Versus like the person trying to send $100 to their mom from New York. So the pragmatism there was basically, hey, this is kind of the big opportunity here. Outside of traditional banks, no one is really solving for this and into that space. And that was the rationale behind making that choice to do B2B. And then also cross-border. And I also think that one of the things that we kind of leveraged on, and perhaps another alternative answer to your first question, is the fact that myself and Anthony, who's my co-founder, spent time in the city, also made us understand kind of how traditional financial institutions work and are structured. And we thought that we had perhaps some knowledge that we could use to solve for something by building something in London, which for us was the fintech capital of the world, arguably still is, and also
hanging on by a thread.
But boy, I think London has so many things going for it, and we can have that conversation another day. So for us, it was like, how do you leverage what you know in this space
and who you know? So it's knowledge and networks, bruv.
And a bit of who you know, right?
Yeah.
So I don't think the who you know really helped out, especially when we're trying to get the early banking relationship.
Vinod didn't hurt.
It didn't hurt, but yeah, it didn't hurt because he basically saw the future, right? And then 6 years in. But on the who you know part, so in the early days when we kind of like said, hey, we're building this, cross-border fintech, we want to be able to service African businesses. Some of the banks that I had worked with, were new people in and basically said, let's set up a meeting. Like, no one wanted to listen because it's like, oh, shit, Africa, that's high risk, right? There's a reason no one's touching the continent. Everyone's kind of like, obviously, hopefully now seeing the opportunity and understand that people can put guardrails in place to make it safer. But that was kind of the early intent, was how do you build to pragmatically take advantage of this significant opportunity, and then most importantly, use technology to reduce some of the risk people have ascribed to this region. And that's fundamentally kind of like, that still holds true to today in terms of how we're approaching the problem.
I'm going to list 3 things that I think are major signals at least, or massive trends in the making. And so the first one is Paystack's new consumer app Zap. So there's a B2B player, widely regarded, a headline sort of actor in startup Africa, and they've gone consumer app all of a sudden with this thing called Zap. So that's number one. The second thing is Bitcoin on its way to being a global reserve currency. Thank you, America. under Donald Trump. Okay. And then, of course, there's the stablecoin trend, which I think you alluded to a little earlier, which is just generally this world of speculative crypto starting to meet sovereign fiat-led monetary dispensations across the world.
So first, the trend of a B2B player wanting to do consumer, I think to a certain extent, you get to a fork in the road where you need to make a commercial or strategic business decision. I think the way that technology is set up, and fintechs in general, is you basically have fungibility between businesses and consumers. The only thing you probably need to tweak is how do you acquire them. So if you have gotten to a stage where you feel like you've penetrated as many businesses as possible, you then have strategic questions to ask about what next. And the one thing that, we know holds true in Africa is that there's just a significant population demographic, right? So I think I can't speak to the kind of the rationale behind, the Paystack team deciding to do consumer, but I think at some point you can just say, well, there's potentially 500,000, 1 million businesses in Nigeria that would like to receive money online, some offline. there's 228 million people, probably about 150 of them are economically active. So I either keep building into this 500K total addressable market, or I expand my TAM to 100 and odd million people. So that might have been the rationale.
It's like vertical integration of sorts.
It's like vertical integration of sorts. And ultimately as well, apart from your go-to-market and customer acquisition, the tech is the same, right? So the tech it takes a business to use to transfer money is the same it will take a consumer to transfer money. And I think they're well-renowned for being best in class with product and tech. So that's probably the rationale behind that.
So would you see that as an interesting signal being led by someone with a clout to execute on it? Or is that something more broadly speaking we should expect to see more of?
I wouldn't say that's a trend. I think that we've seen quite a few people go the other way around. They start with consumer and then they go into business. So I think serving both consumers and businesses, or acquiring both consumers and businesses as customers, is a trend that has been ongoing for a while. There are rarer cases of pure B2B players transitioning into accommodating consumers as well, which is probably why the Paystack story is interesting. But there's a lot more cases of traditional consumer players transitioning into acquiring businesses. I can speak to kind of ourselves at Verto. I think that fundamentally what we hold true is that the B2B space is still significantly underpenetrated. About 96-97% of business cross-border payment is still being done through traditional banks.
No way, it's 96%?
96 to 97%.
2025?
Yeah, 2025. It's still being done through traditional banks. So there's so much to build into for us, especially because we're sticking to our cross-border knitting, right? We're not doing local acquiring and the rest. What we can do, which we're doing right now with one of our products called Atlas, is actually powering the ability to make payments to consumers, not just businesses. And I think there's room to build into that as well. So your customer would still be a business, but then you're helping that business pay to consumers or pay to individuals as well at scale, right? So there's a payroll use case for that. There's a creator economy use case for that. So, all these folks with content on YouTube in Africa, how do they get paid if they want to get paid in dollars? And how do you do that and build something strong to do that? So that's kind of how we're thinking about this space.
Never mind all the people who are starting to serve the globe from wherever they are on the continent, given how they can because of all these AI tools we have and how, careers just changing.
I think that's a trend as well. And this is back to what I was talking about, access and networks and just the scale at which technology can help you access places that you probably don't. We started building out an engineering team in Nigeria. We historically had always had engineers in India, and same quality, strong, software engineers. So that same engineer could work for anyone. Obviously, we're a global fintech, but it could also work for anyone else in the world. So there's no reason why you can't have that trend continue. And I think that's something that we're seeing a bit more of as well.
Which markets are you live, by the way, on the continent?
Sure. We're live in Nigeria, South Africa, Kenya, Tanzania, and the Francophone regions of ZAF.
So then I just wonder to what extent the unicornification, if that's even a word, of Moniepoint has lifted the tide for everyone in fintech or in payments in your case. To what extent has that aided or maybe challenged the VC narrative you now have to make today in order to sort of raise your next round? Or perhaps you're one of the lucky few who don't even need to raise a round at this point.
I mean, we're lucky. We've been profitable and cash flow positive as a business for, I would say, probably about 18 months now. But we are obviously venture backed and we have institutional investors. So we do have a duty to build the biggest business we can. And we also have obviously a big problem we're trying to solve for. So for all intents and purposes, we're not trying to run a bootstrapped one-man shop. So the whole idea will be to obviously continue scaling. A rising tide lifts all boats. I think that I spend some time with investors internationally, and for a period of time, I think every time I go to New York and speak to kind of, growth equity guys, the narrative about Africa has been not very positive because unfortunately there's been one or two adverse media type situations with some of the folks that have been well funded on the continent. So it's always good to see, I guess in the Moniepoint case, a true homegrown local success story.
That wasn't even trying to go VC, really.
That wasn't even trying to go VC. And it's fundamentally just a well-run kind of operational product tech business. that is so focused and going deep into one market. Because every time I tell people Nigeria, kind of the VCs always laugh me out of the room, and I try to sell the story and all that stuff. So good to see someone that is super focused on that market actually get some validation in terms of raising a decent round. So a rising tide lifts all boats. And I think that obviously helps with the narrative. There's no reason why we shouldn't have an African equivalent of a new bank. I know Moniepoint to a certain extent is doing some of the good work. Time in South Africa as well. I think the continent is big enough to have like a new bank type event.
So then there was a question of Bitcoin as a reserve currency.
And stablecoin. So I'll take the Bitcoin one. So for a very long time, and this for me still holds true, there's just no transactional real world use case for Bitcoin. There is a speculative asset use case for it, but it's actually not physical. So you can't even correlate it to like gold, for example. So the whole notion of it being any kind of currency for me is fundamentally deeply flawed, because it has a finite, you're not going to print more Bitcoin up, and it is 20 odd million, and that's the finite amount, right? And it's extremely volatile. So I think that without going to the politics of it, so you've got an extremely entrepreneurial president who basically just wants to, fire on all cylinders and be pro kind of free market liberal. So I think some of that kind of like, let's add Bitcoin to our reserves is just part of that kind of vibe, if I can put it that way, right? So I'll take a lot of that with a pinch of salt, because it's not fundamentally a currency, right?
I think what I'm hearing you say is a signal sure by a very, very, very prominent medium, which is the US president at the moment, but perhaps a signal to weight differently to others.
Yeah, I would say that. And like I said, without going into the politics of it, I think everyone kind of knows what the current president stands for and his views on a lot of things, because he's been very, I guess, very vocal about it. So that's what I would think, what I'll say about kind of Bitcoin being kind of a reserve currency.
But then the stablecoin question, I would imagine, would have a fairly pragmatic view to that, given the work you do in B2B payments. And correct me if I'm wrong. Mm-hmm. On the one end of the spectrum, someone might argue, hey, isn't this something that could disrupt the work you've been doing for the last several years in creating a proprietary mechanism and trust basis to work with you to solve this problem? I mean, if that suddenly became democratized through stablecoin, isn't that effectively a disruption to your well-laid plans on one end? On the other end, you're no doubt strategically looking at this as an opportunity to augment everything you've been doing. I imagine I'm going to hear more about the latter.
So you're very correct in the sense that for us, it's actually right now kind of like an innovator's dilemma. You're like, do you embrace this technology that can essentially affect your cash cow, which for us is fiat cross-border?
It's like Google with their ad business right now, given and the disruption of SEO, given AI search engines.
Yeah, 100%. And then to your point as well, for us, it's almost like, well, this is kind of like, something that we need to embrace because it just makes our life easier. So very fast crash course on why cross-border payments in markets such as Africa is hard. First, the currencies are mostly illiquid. They're also, highly volatile, right? So they change value very, very frequently. There's long settlement periods between when you want to move money on the continent, because it's deemed as high risk. There's not that many correspondent banks that can deal with sort of African banks, for example. So it just makes it much longer to move money across the continent. And then also in some markets, South Africa being one of them, there is actual capital controls where there's a regulatory kind of hindrance to the way you can move money. You need to do like reporting and the likes of it. What stablecoin and then fiat as well is not a 24/7 currency. Fiat movement is not 24/7. So banks close on the weekends, cross-border payments businesses like us don't work on Saturdays and Sundays and give quotes. When we do, we put a spread on it because, we're not going to be able to buy the currency over the weekend. What stablecoin does is, for me, it's a first transactional real-world example of how cryptocurrencies can actually solve a problem. Currency illiquidity, it's pegged to the dollar. There is now wider pools of liquidity in USDT and USDC, which are the two prominent stablecoins that, are being used in emerging markets.
Tether and
Circle. So there's decent liquidity, right? So if you want to do $5 million to USDT or USDC, Tether or Circle, you'll be able to do it. So that's if you want to do $5 million to Nigerian Naira, you might not be able because it could be quite illiquid at times. So that's great. there's also kind of the problem with settlement times. This is a 24/7 real time. All these exchanges are, literally working 24/7. So at any point in time, if you're doing like treasury management, you can always easily convert your currency into stable or off ramp out of stable. So that's great as well. And then when you think about markets where there is capital controls, they are still kind of waking up to kind of stables, for example, and building the regulatory kind of hindrances to make people not, send money out. So in South Africa now, you can effectively not maybe sell your rand for dollars conveniently, but you can sell your rand for Circle or Tether conveniently and take it out of the country. So I think it's solving a real pain point. And for businesses such as ours, we are innovators. I talked about how, the first time I really looked into stablecoins was 6 years ago when Vinod mentioned it. So we're basically like, wow, this is like something we need to embrace and be on top of. And that's a lot of the work we're doing internally as well. This is not a popular opinion. And I know there was a recent huge acquisition in this space. In developed markets, there's just no case for stablecoins. So people that talk about, it's going to disrupt Visa and MasterCard and people will pay in stables instead of using cards or whatever. I don't see that coming anytime soon. But in emerging markets, because they have these challenges, this is something that really can scale and can be fundamental to changing the way money is being moved. But it's still only open to a certain segment. So not everyone in like Nigeria or Kenya or wherever has access to any of these exchanges where you can unwrap and off-ramp stables. So it's still not as popular, as democratized as people think. But I think it's something that definitely, one should embrace. And we're 100% in support of kind of stables as being a means to do cross-border payments efficiently in emerging markets.
You actually just schooled me on an uninformed sort of armchair view, which was seeing the trend towards stablecoins as by default in favor of more developed markets that can turn this on or, adopt this readily in a way that maybe less developed markets might be challenged at. But I hadn't actually accounted for the default challenge in adoption in places where the acquired trust of, say, Visa and MasterCard are still at all-time high and not about to be disrupted by some new thing very easily. This just makes for an excuse to circle back to see two things. I think how at the coalface of startup innovation, these things will be integrated into products like the ones Verto, creates and massages into the market, but also have you reflect on how the institutional realities, these worlds are mediated by regulators, governments, of course, long-standing institutions, how all of those are contending with these things as well. And so no pressure, but you may be hearing from us again.
Sure. More than happy. I think it's been fascinating for me as well. So always happy to kind of share my thoughts and views on this. So I'd say the first bit is, stablecoins are, real and present and basically should be embraced by any true innovator in the cross-border payment space, especially when you're facing off to emerging markets. And I also think that regulators and sovereigns are also on this as well, because there's a lot of central bank-backed digital currencies either in flight or that have been proposed. And that essentially is just a central bank kind of stablecoin, right? Because the way a digital currency works that is central bank backed is that there would be the fiat of that country backing it up and it's one for one. So I think the regulators and kind of the institutions are all on this as well. So they've realized the opportunity. But my big takeaway for this is that this is truly only applicable to emerging markets rather than kind of developed markets. So it's a trend that would hold well in emerging markets.
Can't wait to reflect on that further in some writing. And thank you again for being on the African Tech Roundup, Ola.
It's been amazing. Thank you so much, Andile. Really appreciate you taking the time to hear some of my views.
It's an absolute pleasure.